Hello everybody, Steve Griffiths here, the developer of the MTPredictor software program. In today's MTPredictor video, I would like to look at how to potentially catch the end of a 5-wave sequence and the additional checks we have to do for that. But as usual, let's start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing, or put another way, all professional traders know and understand, but more importantly accept, and that's the important point, accept that trading losses will always happen no matter what approach you take to the markets. So let's have a look at the YM yesterday, and in particular the rally up into the high of the day here. You can see we had an automatic DP sell, which was actually on a red stroke black MTP trend, so it was a valid trade to take anyway. But if I place the Elliott waves on here, to do this you right mouse click over the pivot and then you come down to Elliott wave intermediate. You can see that this rally here was a 5-wave sequence, 1, 2, 3, 4, 5. Not a great sequence because the wave 3 was not obviously the longest and strongest, but nevertheless it was a 5-wave sequence. You can see here the high came in right at the minimum wave 5 WPT. I want to compare this with the ES. So the ES actually had a VS cell set up coming at the high here, and if I right mouse click here then do Elliott wave intermediate, you can see this also had a 5-wave sequence going up into the high, with the high coming in around the minimum wave 5 WPT. So what's the difference? Well, first and foremost you can see that this potential high was against our MTP trend, so there was one thing that was telling you that this was less than ideal. But the most important thing, and this is what we have to do, is we have to look at the higher time frame charts. Now the higher time frame is a time frame between 3 and 5 time frames higher. So if you're looking at a 3-minute chart as we are here, you'd then go out to the 15-minute chart. If you're looking at say a daily for your analysis, you'd go out to the weekly. If you're say looking at an hourly forex, you go out to the 4-hourly chart. So let's go out to the 15-minute chart here, and you can see there was actually a pivot swing high, which was actually the high of the day on the previous day. So I'm just going to use our training mode to jump back to a bit earlier in the day, around about here somewhere, and you can see that there's that prior pivot high. So how do we place our DPs on the chart? Well, we hover over this high, we right mouse click, do decision point. Can you see how it's on the chart in advance? Can you see there? It's before the market even got there. It's a leading indicator. It was there preparing you in advance for a potential high. So if I turn training mode off, you can see the market did indeed make its high at that 15-minute resistance before backing off. So if I now come down to the 3-minute chart, let's see what difference that makes. Well, the market did have a first attempt at the high here, but you can see there was no MTPredictor cell set up at that high, but there was as it made the second attempt at the 15-minute resistance. So that's what we're looking for. We're looking for a potential trade setup, but when it falls in line with our higher time frame large degree trend, in other words our higher time frame support and resistance. That's why these potential sell setups here earlier in the day, can you see these history triangles here? These were not ideal because they weren't fitting in with our higher time frame analysis quite as clearly as what we have here. If I now go to the ES chart and I go out to the 15-minute chart of the ES, if I do exactly the same and place its DP resistance on, you can see the market never got up to its DP resistance. In fact, if anything, if I right mouse click and do DP there, whoops, it was actually coming off a sloppy DP support. That wasn't very clear because the market had gone through it, up through. It wasn't nice and clear like we like to see. So when you come down to the 3-minute chart on the ES, if anything, the large trend was up, hence the blue MTP trend. So can you see how this was not an ideal 5-wave sequence, whereas this one was? This one was because it came in at higher time frame resistance. This one wasn't because it didn't come in at high time frame resistance. That's why trying to pick the end of a 5-wave sequence is normally quite risky. It's like standing in front of a train. People sometimes say you tend to get squished more often than not, and the reason for that is because it's the end of a trend. It's a trend termination. So that's why when we're looking for a trend termination, as in at the end of a 5-wave sequence, we're looking for other reasons why the trend might be ending or terminating. In this case, we look for the higher time frame support or resistance. So that's why this is a great example, because the ES was not ideal because it was not at higher time frame resistance, whereas compare that to the YM was because it was at higher time frame resistance. So in this case, you can say, well, actually, this looks like a good potential sell setup. It was actually an automatic DP sell as well. So if we just right mouse click here, place our analysis on, you can see that the market went down to its initial target there for a nice plus 4.8R profit. Remember, we use correct position sizing to keep our initial risk small under control. In this case, less than 2% of a sample $20,000 account. If we were just doing our analysis on this as a 5-wave sequence, then basically our target would be the DP from the prior wave 4. So again, I'm going to use our training mode to jump back to about here. So where would the target be? Well, it would be the DP from the prior wave 4. So there's your prior wave 4. You place your DP here. So here would be your potential target. So if we now do our risk reward in and around, it would be the bar before actually. That red sell bar up there, you'd be into a short trade, and that would be your target. So that's how I'd construct it manually. And as we've seen already, the market did come down to that target where a potential 4.8 or almost 5R profit was available. So hopefully this has been a good video to show you how to use some of the more advanced techniques within MTPredictor. So not only constructing your potential trade setups in and around your higher time frame support and resistance as we always do, but also in this particular case looking at a 5-wave sequence and showing the difference between a 5-wave sequence that is potentially ending at higher time frame support and resistance compared to a 5-wave sequence as we had in the ES that was ending in the middle of nowhere, and why these ones are not good to take and why they tend to end up in losing trades. You can see that if I go back to this point here, there was actually a potential sell setup here. If I actually use our training mode, I'll just show you that. If I use our training mode and go back to here, at the time, if I put the Elliott wave intermediate, see this could look like a potential ideal setup, just as we've been looking at in the YM. You see it was exactly the same as the YM. Everything looked ideal, but in this particular case it would have been stopped out for a loss. And the reason for that is because it was less than ideal, because it was not coming in at higher time frame resistance. So a good video today to show some of the more advanced techniques that we can use in MTPredictor when you're trading with MTPredictor, and in this particular case looking at catching the end of a 5-wave sequence that unfolds at higher time frame support and resistance.